Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So here is very similar as to on the euro currency. The short-term intraday bullish context has been broken totally, just because the points that we were considering on Monday for a potential entry has been broken in the blink of an eye. So market even hasn't stopped there, so it was straight for downward direction. It tells the couple of things. First of all, the market is increasing the scale of retracement. So since the pullback is relatively small, even by looking at the intraday charts, we can't say that it's something really big change in sentiment or something. But still, market turning to the downside retracement, which actually, in the current situation, for truth's sake, it's absolutely natural. So because market was really overextended for long term. And the appearing of this retracement, starting with this retracement, is absolutely normal thing. Second, it means that on the daily chart, potentially retracement could continue and market could reach deeper standing level. Particularly speaking on the daily, the area around 32 seems very interesting because it accompanied with the daily oversold, and here we have the confluence support. Taking in consideration all the background of this strong upper direction, chances that we could get here the healthy bounce looks really nice, even if later we will see another leg of the retracement. But at the first touch, the chances on the pullback seems really good. So that is a conclusion for the daily chart. Here we do nothing right now, watching for a deeper retracement. If we will get this action down to the 32, we start watching for a possible position taken on the long side with a possible pullback. That's what we have on the daily. On intraday charts, we still have some additional patterns. First of all, we need to take a look at the 4 time frame chart. Take in consideration that market is not oversold right now. So here, this is actually the sign that short-term context is over. So if you remember last time, we talked only on the small stressing swing. So short-term context was based only on the small stressing swing, but all of them has been dropped and erased. But for now, market hits the first 30% support after very strong upper direction. And you can see that this is not just the 30% support around 33, this is confluence support. In fact, we could consider this trading setup as a bread and butter buy trade. So if you would like to, I could put here even the moving average. So that's actually at a strong level, and taking into consideration the momentum, chances that here we could get the retracement, maybe not very significant, but still the pullback somewhere to 33.90, so $60 to $70 per contract. So that might happen. So that's the thing that we have. Even if pullback will be smaller, the risk of the collapse here and the risk to get the loss relatively small, just because we stand in a rather strong support area, and chances stand in favor of the pullback. On the 30-minute chart, you can see that market has formed a steep butterfly pattern here, completion this downward action. So since market stands very close to the lows, this is a very comfortable moment to think about the position taken. So if you take it, your risk will be just below the confluence, your stop order will be just below the confluence. And once market keep going higher, you could move stop to the break even and see what will happen. So potentially, as I said, it might be action. If even we take into consideration some symmetry, it might be somewhere at 33.50, which is actually $30–$35 per contract from the current levels. This will be not bad, but potentially it might be even stronger. So that for those of you who would like to experiment and try to trade these minor stops on the intraday charts. That's what we have potentially, as I said, why we're watching for this level as well. With taking a look at the larger scale, you easily could imagine the hand and shoulders or something that could give us big A, B, C, that lead us directly to the trading on the daily chart. But for now, on the intraday charts, those who would like to be involved, those who look at is interested in that, so why not? This is actually also the step that you could consider. If you like it, you could probably try it, especially because currently potential risk seems very small.